So I want to watch this one. Why are people freaking out over bonds? Now,
Hello, everyone.
they were freaking out over bonds a hot minute ago. Are we still freaking out over
Plain
bonds?
Bagel. I'm your host.
I saw somebody leave a YouTube comment that was like, dude, how can you be bullish in this market when Japanese bonds are crashing? Okay. Let Japanese bonds crash. And then you can have a different outlook and a completely different financial asset on the other side of the world. I don't understand.
Host Richard Coffin. We're taking a break from covering this channel's favorite topic of tariffs to cover our second favorite T-word topic, Treasury bonds. Now, I know you're probably on the edge of your seat struggling to contain your excitement, but please be seated, settle down if you can, because in fact, our discussion today is quite dire and serious, according to many on Twitter, with many people ringing the alarm bells over U.S. Treasury bonds recently and warning others to call their mom, their mother's aunt twice removed, Mother Mary Bethlehem.
I didn't mean to click that. That's my bad. But I'll answer the question. If you sign up for a free trial, are you able to pay for the annual program at the discounted rate? Of course. Of course.
Because the bond market as we know it is falling apart. According to Twitter anyway. As for why people are seemingly getting so spooked here, the short of it is...
Ooh, great lesson right off the bat. Stop listening to people on Twitter. Right? Who cares what they have to say? Follow your own trading plan. In fact, that was part of yesterday's OVTLYR University lesson. I brought the receipts. Hold tight. OVTLYR University lesson 6. Scrolly. Right? Ignore the noise. Ignore the noise. Ignore the noise, right? On stock tips, don't listen to Twitter tweeters, and YouTubers, right? That you need to ignore the noise of what's going on and focus in on what your plan is. And who cares what those Twitter tweeters are saying about Japanese bonds or US Treasury bonds? It doesn't matter. It doesn't matter at all. If you have a plan and you know what you're going to do whenever you see the SPY do one thing or another, right? That's all that matters. Twitter tweeters.
So that this past couple of weeks, we've seen...
Wait. Deep thought. Is that right? The annual pass is just 82 cents a day, which is roughly 64% off the regular monthly price. That's exactly correct.
The 20-year and the 30-year U.S. Treasury bond yield, meaning the rate these instruments pay relative to their price, both reach above 5%, nearly surpassing the 18-year highs seen in 2023 before.
Oh, wait a minute. Hold tight here. Did somebody say OVTLYR University? If only we had some music to go along with OVTLYR University. I wonder, hang on, what's this button do?
Are you ready? Let's go! Respect is earned. Respect is never given.
That's right. Every Tuesday and Thursday, we go live in the afternoons for OVTLYR University, where I'm going to teach you everything that I know about trading stocks. And I really appreciate the layups y'all give me today. This is fun. Okay, let's get back to this.
Or settling lower, meaning not only that U.S. Treasury bonds, considered by many as one of the safest assets out there, are selling off, but also meaning that the U.S. government is seeing its cost of borrowing increased quite substantially. And it's been accompanied, if not caused, by a number of concerning updates, including recently the downgrading of the U.S. credit rating by Moody's, a lackluster 20-year bond auction, and a similar jump in Treasury yields in Japan, where 40-year Treasury bonds reached their highest yield on record, albeit at under 4%. Something that some fear could translate into another sell-off event for U.S. markets, similar to what happened last August. And as we typically see with these sort of negative updates, people have really run with these headlines and perhaps gone with some over-the-top posts over the impending collapse of the United States. And to be clear, there are a lot of real risks arising from the situation. But as is usually the case, there's also a lot of nuance that show that, yes, while there is something worth monitoring, it perhaps doesn't warrant the alarmism we've seen online. So today, I'll try to explain what exactly is happening with the U.S. Treasury bond market, why it matters for those who don't understand what these auctions and factors mean for actual investors and the economy, and try to put things into perspective without the sort of alarmist rhetoric. And I know that I've sort of covered this topic in passing in many of my past tariff videos, given that Treasury bonds have been impacted by the ongoing trade war. But given that the topic isn't inherently beginner friendly, and we have a lot of these sort of fire and brimstone posts circulating, I figured it deserved a dedicated video to really address the anxieties, given that...
Okay, for real. I'm really glad he's bringing this up and calling out these people and bringing the receipts. Like, legitimately, focus on your plan. Don't stress about what the bond market's doing. Don't stress about who gives a flying monkey donkey about the OVTLYR, or I'm sorry, not the OVTLYR, the Japanese bond market. Honestly, it doesn't matter, right? Either be in when the market's working in your favor or be out of the way. Don't stress over all the noise in the meantime. Like, you will sleep better if you stop looking at all that In fact, I would really recommend, now, of course, I'm biased, but I would recommend going and unsubscribing to all of those channels, all of those Twitter accounts that are keeping you awake at night. All of those accounts that are trying to cause the FOMO, right? The FOMO of getting into something and the fear that you got to get out of something and that everything is going to crash. There's one account. Hang on. Let's go to this account real quick. Let's go to Reventure Consulting. Dude, constantly, like, I'm subscribed to his channel and I really shouldn't be. Like, it's constantly, this is worse than 2008. Prepare yourself. Mass exodus. All these things over collapse, right? Just this fear mongering for every video, right? 2 months ago, recession 2.0, right? 3 months ago, Florida's on the verge of collapse. 4 months ago, home prices are collapsing in Texas. 7 months ago, 2025 warning, mass sell-offs. There's nothing left. And let's go back even further. 8 months ago, 40% drop, mortgage collapse. Let's go back even further. 30% drop 10 months ago, imminent defaults, 40% crashes. The crash is happening. Dude, it gets old. It gets old. Wait, no way. Did you really, Joshua? Thank you for sharing that. I lost a bunch of money buying puts listening to Reventure. Look at that. Dude. Legitimately. It's just hot garbage after hot garbage. Now, I'm sure he has good information, but when you present it as every day is going to be a crash, right? It's the boy who cried wolf. Nobody's listening anymore. By the way, you should put #OUTLYR in the chat if you haven't already. I mean, basically 300 people watching at this very moment live, yet only 98 entries. So 200 of you guys don't want extra cash in your pocket that I'm going to give you? Whatever. But I mean, if I were watching live, I would put #OUTLYR in the chat. So I would be interested to win. Just saying.
This type of content can really spook individuals, and especially given how complicated it can get at times. So I figured it was worth revisiting and focusing in to try and clear things up. But before hopping into
Okay. I want everybody in the chat to pay respects to CMAC. CMAC/JMAC is helping Mahesh do some really wicked projects upgrading Outlier. So everybody in the chat put CMAC. Everybody in the chat, unless this is a different CMAC and I'm totally sticking my foot in my mouth. Everybody in the chat put CMAC in the chat to pay respects to CMAC. He is doing amazing stuff. Thanks to this group, I'm actually going to uninstall Twitter. I have not looked at Twitter in years at this point. And every time I do, like if someone sends me a link and I just go like to the browse section, dude, it is like fear mongering from every direction. It is so ugly and political. And it's like, I can't do that. YouTube is my home. YouTube's my safe space. But unsubscribe from all that stuff. He's unsubscribing from all the emails. So much time and headache saved. Thanks, everybody. Yeah. Hopefully, for sure, that is the right CMAC. Because if it's not, I'm going to feel really stupid.
into the recent updates, let's start with a quick primer on treasuries and yields and why they even matter for the uninitiated. If this is something that you're well familiar with, you can use the timestamps in the description down below to skip this section. As most people are aware, treasury bonds are an investment instrument that allow people to lend money to the government.
He's just talking too fast. Hang on. I got to slow it down slightly. 1.25 usually works for me, but we're going to have to go like 110. Okay. By the way, I'm a snob with YouTube Premium. That's why I have that control.
In this case, the US government, for a specified interest payment and a specified period of time. When we talk about a 10, 20, or 30-year treasury bond, that's how long the loan is outstanding, after which you get the face value back. And because the US government spends more each year than it brings in with taxes, it sells or issues these treasury bonds to raise money to make up that difference. Now, the actual interest rate that the government pays on these loans is generally a factor of demand for the bonds. There are other sort of factors that matter, like the Federal Reserve and its own interventions. But generally speaking, the more that people want to invest in US Treasury bonds, the lower the interest rate that the government will ultimately have to pay on new issuances. And over the last decade, the average interest rate that the government has paid on these bonds has been fairly low, with the average interest rate paid falling below 3% from 2011 to 2023. And part of that is because these instruments are generally considered very low risk. In fact, some models even assume that they are risk-free, the sort of lowest amount of risk you can take on when investing in the US market. However, recently, we've seen treasury yields for the 10, 20, and 30-year treasury bond, which ultimately determines the interest rate paid on new debt issuances from the government, increased quite a bit, with the 20-year yield specifically rising nearly 70 basis points from its lowest close to its highest in just around a month and a half, which generally indicates lower bond demand from investors. Yield is a function of how much a bond pays relative to its price. So as the market price decreases, indicative again of lower demand, the yield, and as a result, the interest rate on new government issues increases as a result. And frankly, the increase in this interest rate that the government now has to pay on its bonds to attract enough money from investors.
Okay. So if we look at the 20-year treasury and we go to TLT, this is looking at the price of the asset, not the rate, not the yield. Okay. So let's keep this in mind. TLT is looking at the price, not the yield. Price is inverse of the yield. So you'll see as this is going up, TLT going down. Okay. But here's the deal. Here's the deal. It's the same as it was literally in January, the same as it was in October, November last year. And let's load some more data. Oh, actually, that is quite a lot lower than it was for years. But then again, not any, well, a little bit worse. About the same as it was in 2011, right? So did the world end in 2011 when it was all around the same price as it is right now? Like legitimately, this is the same price today. This is the same price as it is today. So I don't know. It just feels like people are overhyping what's going on in the bond market. So maybe this will teach me. I don't know what I'm talking about. I'm just a random guy on the internet.
Comes at a pretty bad time because in 2025, in addition to new government borrowing from recently announced budgets, the government actually needs to refinance a whopping $9.2 trillion, or just shy of a third of its total outstanding debt. Meaning that suddenly, given how low interest rates have been in the past, the government's going to be paying a lot more in interest on even just its outstanding debt. And as you can imagine, that comes with a number of implications. But why are yields on the rise in the first place? Well, part of it is the fact that the Federal Reserve, the US central bank, has maintained a high federal funds rate since after the pandemic, when it first hiked interest rates to combat inflation. And while the higher interest rate policy from the central bank has been pretty successful in bringing down inflation rates in the US economy, with the current US trade war expected to increase inflation once again, we've seen the Federal Reserve Chair Jerome Powell express caution in cutting rates until we see more stability from US trade policy. So with markets seeing how volatile the trade situation is, and that in general also increasing the risk around these treasury bonds, that could in part be why we're seeing treasury yields increase as markets are pricing in a delay of rate cuts and this heightened volatility. But in terms of what's caused the more acute short-term increase just over the past 2 weeks, where we saw the 20 and 30-year treasury yield reach above 5%, that's generally being attributed to three main factors. Firstly, as we mentioned in the introduction, on Friday, May 16th, we saw the US have its credit rating downgraded. In the US, there are three primary credit rating agencies, Fitch Ratings, S&P, and Moody's, who rate bonds and fixed income instruments for governments and different corporations based on their perceived risk. They do the analysis to determine how risky different borrowers are. And on May 16th, we saw Moody's decrease America's Treasury bond rating from AAA, or the highest level, to AA1, making it the last of the three agencies to downgrade America's rating from the highest level. As for why Moody's downgraded the US, they essentially view the country's current spending trajectory as being unsustainable, with costs on the rise and revenues from taxes expected to stay flat. With the higher refinancing costs for US government debt actually being a key contributor here, with interest expense alone, which represented just 9% of total US revenue in 2021, expected to rise from 18% of revenue in 2024 to 30% by 2035, or 10 years from now. Meaning that by 2035, Moody's expects nearly a third of total US tax revenue to go just towards servicing US government debt, with interest already being one of the largest expense items on the federal budget, even topping defense and Medicaid. Moody's also estimates that the federal deficit will reach nearly 9% of GDP by 2035 versus 6.4% in 2024, and that debt to GDP will rise to 134% versus 98% in.
Okay, I can get behind this. And I'm pretty sure that this is one of the things that Donald Trump has taken over. Now, not trying to get political, but I do think that this is something that he is aware of and is trying to address. So I guess that's a good thing, right? We'll have to see how it plays out. But I know that that is something I've heard people are talking about for him.
2024. All of which, as you can imagine, bond investors didn't take too kindly. Not only because the higher deficits mean that the government will continue to increase the supply of treasury bonds in the market, but because with the higher perceived risk around US debt, given the credit rating downgrade, investors are now demanding a higher return for holding this investment. So that was one of the headlines driving the increase in treasury yields over the past couple of weeks. The second reason, which was actually cited in this Moody's downgrade, is the government's budget, the so-called One Big Beautiful Bill Act, which is not just what Donald Trump calls it. That's the legal name of this bill, which we got the update last week that the House of Representatives had actually passed this bill. And while considered a Republican bill, it's far from fiscally conservative, with the bill actually estimated to add $4 trillion to the U.S. debt load over the next decade. As for what measures are explicitly in the bill, naturally, there's a lot more than I can cover in passing in this video. The bill itself is over 1,000 pages, but includes everything from a $25 billion Golden Dome missile defense system to a new type of savings account formerly called the Mega account, now called the Trump account, that will be providing $1,000 for newborns. And there are some spending cuts and tax increases to try and offset the other tax cuts and spending initiatives in this bill. For example, the bill includes lower spending on food aid and Medicaid, with eligibility criteria being tightened for both programs, something that the CBO estimates will cut 7.6 million people from Medicaid. And there's $330 billion alone expected to come from restructuring around how student loans are repaid. However, these spending cuts, which have generally been geared towards lower income programs and benefits, are not expected to offset the other costs of the bill and tax reductions, which have also been controversial given that they provide the biggest benefit to higher income tax brackets. Now, despite being approved by the House of Representatives, the bill is expected to change further as it goes through the Senate, which, despite being a Republican majority, is expected to make further revisions to further reduce the deficits. But naturally, this update that we'd see this widening of the budget deficit was negative news for Treasury yields. Now, the third and final short-term factor contributing to higher Treasury yields that some might actually highlight as the most acute factor here, given that we saw Treasury yields peak on the same day as this update, was the news of a, quote, lackluster 20-year Treasury bond auction this past Wednesday. You see, when the U.S. Treasury Department goes to issue new bonds, it typically does so through an auction where investors, usually institutions, can actually bid whatever yields they're willing to buy the bonds for. With the
I am so in over my head. That's why I don't have a whole lot to say about this. But I got to say, Pixel Mac is JMac. So many Macs. Apologies, JMac. Mahesh told me that that you are helping us put in some new enhancements, and so I was trying to give you some credit. I tagged the wrong Mac. My apologies. So if you guys want to put JMac in the chat, JMac in the chat, JMAC in the chat to pay the real respects to the real man, that would be cool. That would be cool. Let's continue.
Government then issuing bonds from basically lowest yield and upwards to raise as much money as it needs. And this past week, in an auction for $16 billion of new 20-year bonds, the government saw itself reaching for yields as high as 5.046% in order to complete the sale, which was quite a bit higher than the previous 4.81% paid in the previous $13 billion auction held last month, and the average interest rate of 4.613 paid over the last 6 auctions. With the auction not only directly increasing the yield for 20-year treasuries, given that these bonds were being issued at a high rate, but also further deteriorating the sentiment around U.S. Treasury bonds and demonstrating a decrease in appetite from investors for U.S. Treasuries. Now, there are some who have speculated that other countries have actively played a role in the Treasury sell-off, with some specifically claiming that Japan, the largest foreign holder of U.S. Treasuries, has been selling off hundreds of billions of dollars worth of their trillion-dollar stockpile, either in retaliation to U.S. trade policy or as a result of some carry.
Okay. So another one of those alarmist tweets right here. Red alert, Japan just dumped all this treasury, so largest sell-off on record. If this continues, it could trigger a global bond crisis. Okay, sure. If the price of Big Macs go up any farther, it's going to trigger a global fast food crisis. I mean, like, we can theorize all day. We don't have to like fear monger on everything.
Trade unwinding related to their own bond market woes. So far, though, we haven't had any official figures to back up these claims. And in fact, some experts have cast doubt on the idea that Japan has meaningfully reduced its treasury holdings. So it doesn't at this point appear to be a material factor. So that's why we saw treasury yields spike this past week. As for why it matters and why we're seeing people raise the alarm bells over all this, generally speaking, treasury yields are sort of gravity on the market. The higher they rise, the more pressure there is on economic activity. Not just because the government might have to eventually pursue more austerity measures, decreasing spending or increasing taxes to try and offset these this higher cost of borrowing money, but because these treasury yields are a benchmark for other interest rates in the economy, and as interest rates increase, they generally discourage spending in an economy. For example, we recently saw mortgage rates in the US economy rise to nearly 7%, something that, as you can imagine, makes it harder to buy a house. It also increases the risk of defaults in the economy as people have to refinance into more expensive loans. And as treasury yields increase, they can also apply pressure to stock markets, not only because the companies themselves are, again, seeing higher interest rates, but because it actually reduces the attractiveness of stocks relative to treasury bonds, which are now offering a higher, again, technically risk-free rate for investors. But one of the more
Yeah, I agree. And because of this, I really don't care to watch this video anymore. The skinny buff guy. Next week, they'll go the other direction and they'll fillmonger some other metric. Yeah, exactly. So, a little frustrating. I was hoping to get more out of this, but it just, let's fearmonger on one thing or another. Who cares? But I did like how Wild Stimpy Norwood said, none of this matters. Only the Outlier 9 is all I worry about now. Abso-freaking-lutely. So let's go to the next thing here. And I want to share some of your member highlights over in the Discord, talking about how you guys have been using the Outlier 9 this week. This is going to be super cool. And while I'm doing that, tell me some of your success stories in the chat. While I look this up, I want to hear from you in the chat. I want to see this and share this right now, who's watching live, how you've been using Outlier and the Outlier 9. So let's pop over here. Let's go into the share your big wins section here. Where's the share your big wins? Hold tight. Let me find that. I have completely lost where I am. There we are. Share your big wins. Had an awesome. So Regio had an awesome day. Plucked OKLO and SMR from the buy list. SMR cleared an order block pre-market and hasn't looked back. Rolled OKLO and SMR twice. Has created OB, so it clears before I'll be going. Before that, I'll be stopped out. OKLO is still going strong. Supporting order blocks. New stop limit. Happy Tuesday, dude. That is a happy Tuesday. Look at that. 40% gain, 27% gain, 20% gain. Outstanding. Shane the Plumber says he rolled his $45 call on X, which is US Steel, up to the 51 strike and took in $540 in credit. That removed 100% of his original $460 risk and locked in an $80 profit. My break even moved from around 48 to 53 with more room to the upside. Dude, outstanding work, Shane, by the way. Way to go. You nailed that. Becca D says Rocket Lab up 83% and it's skyrocketing after hours. And she's got puts, or she's got calls. Outstanding. This is the best. I love seeing you guys be successful. That's what I love, right? Senior Wahoo says this week's win is sit in cash and don't F up. Just sit in cash and don't F up. Tuesday's mini rally was calling me and the force of the FOMO was real. Yeah, let's go look at that real quick. I saw so many comments, like all the trolls came out on Tuesday because on Friday we had a sell signal on the SPY. We had bearish market breadth. And on Tuesday, after 1, 2, 3 days closed below the 10 EMA, on Tuesday, we had a rally and it's done nothing since then. And all the trolls came out when it was up, how much? 2%? They're like, oh my God, Chris, you're so stupid. Tell me when the outlier signals work because they clearly don't today, right? I mean, the deal with Outlier 9 is that there are times when the market's going to move a little bit like this, but we don't care about those moves. We don't care about these itty bitty baby moves. We care about these moves like in Palantir, right? This move right here, where I made 74% in 5 trading days, right? That's what we care about, right? We don't care about those little blips. And let's go to Datadog. Now, a lot of you watching also made big money on these, right? Datadog, this move right here, this 10% move in the span of 5 days, or 3 days, I should say, which gave me 106%. That's what we're looking for. Or we can go to Robinhood, right? A 93% gain in 3 days. 96% gain in 3 days when the stock was up 14%. That's the outlier move we're looking for. That's why we wait for Outlier 9. That's what we do here. And there are times where sitting in cash and not effing up is the trade. Now, let's go through the Outlier 9 real quick and see where we are today, and then we'll pick some winners. Okay. So first, the trend of the market. The trend of the market. Let's go to watch list. Let's go to the SPY, which has a buy signal. Now, I'll be the first to tell you, there's been a bit of noisiness with the buy signals this week, for sure. No mo FOMO, Hammer Donkey. Chi Wing Yu says, I've just been sitting cash and not effing up. Right. A little bit of noise this week, but that's okay. That's why we look at more than just the market signal. All right. So first, trend. Trend is bullish. We can see that right with the green overlay right here. The trend is bullish. The 10's over the 20, prices over the 50. Easy. Currently, we're sitting on a buy signal. So let's drop that as a green right here. Okay. And then market breadth really tanked last week. I think it was Wednesday, there were 400 sell signals, Thursday, 300, Friday, 200 sell signals. That's why market breadth collapsed last week. Absolutely collapsed. Now, reading this, it's still very depressed. Still very depressed. So market breadth has a bearish posture for me. And then if we look at the sectors, right, over here on the 10 EMA, not a single sector, not one single sector out of the 11 sectors in the market are bullish. Not one. So it doesn't matter which sector it is. They're all red. And then, you know, we could look at the individual stocks, right? Let's look at Palantir, since I was just looking at Palantir a moment ago. Pull this up here in the tech sector. Palantir has a sell signal, right? So we can mark that red. And let's go to the fear and greed of the sector. So the fear and greed average of the sector is right here. And we can see it's moving down and down and down. So this is getting bearish. So fear and greed is bearish on the sector. The trend of Palantir is moving up, 10 over 20, price over 50. So that's why it's green. That makes it easy. And let's mark that green here. Fear and greed on Palantir really collapsing. Look at this. Very greedy, but now it's getting way, 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 way less greedy. In fact, it's getting into fearfulness. It's at 49.26 today. So that's red. And then lastly is outlier blocks. So if we go to the chart here, we can look at the outlier blocks. And yeah, Palantir has a giant one overhead and one underneath. So yeah, I wouldn't trade that either direction right now because it's got this. Now reading this, we can objectively say that there are 1, 2, 3, 4, 5, 6 divided by 9, or I should say 9 divided by 6. Nope, 6 divided by 9. No, 3 divided by 9. That's what I wanted. There are 2/3 of the different data points here that are bearish. 2/3, which gives us a score of 33, right? 33 puts Palantir in the weak sell category. So there's no way I would buy Palantir. Not a chance. Not a chance right now. And now you can do that kind of expert level analysis in a moment, right? In a moment, you can pull this up and you can look at, well, first off, you establish the trend of the market, and then everything else you can do on a single page. So we can just throw something else in the chat. Like, let's look at McDonald's, since we're talking about Macs today. You know what, Corey? I wouldn't even trade that with your money. Exactly. Now let's zoom in on MACD. McDonald's here has a sell signal. Okay, right. So that's a sell signal right there. The trend is not bullish. You can see that green overlay is not there. So if it's not bullish, that means it's bearish to me. Okay, easy. The stock itself is getting less greedy, more fearful. We can see that. Fear and greed stays here. Any outlier blocks on McDonald's? No outlier blocks right here. And so on the sector, fear and greed and sector breadth, we can see the average fear and greed score is getting worse. So the fear and greed for the sector is getting worse. And breadth for the sector is getting worse. Right. So looking at this, we have 2 divided by 9 means it's a score of 22. McDonald's is a strong sell. Isn't that cool? Right? With just a couple clicks, you can determine if a stock is a strong buy or a strong sell. Now you want to get all these together to make the slingshot setup, right? When you get everything together, that's your slingshot setup. That's how you can make big money in like record time. Okay. This is what you're looking for. Now, I want to hear from you in the chat. Let me scroll up and see some of your winning stories here real quick. Mike G made money on SMCI thanks to the Outlier 9 entries. My exit strategy is different from Chris, and that's okay. You still use the data and you were successful, Mike. That's what we're looking for here. Hammer Donkey says, random guy it's like you're saying you could make, I don't know, 36% of your portfolio in the span of 6 days. Yeah, dude. Like legitimately, my portfolio went up. I'm pulling it up right now. My portfolio went up 26.99% in 6 trading days. 6 trading days. Right? This is how you do it. You wait and you wait and you wait. You get all the Outlier 9 lined up and you have no mo FOMO, and then you let it run like Brandon did when he made 100% on Tuesday in Rocket Lab. That is how it's done. Isn't that cool? Isn't that cool? So be sure you share your stories in the Discord. Tell me your stories in the chat. And of course, the way that you can pay me back is by telling everyone you know about Outlier. But you know what we have to do right now? We have to give away some money. That's right. If you posted in the weekly winner circle in the share your big wins section, we want to reward you. Like Carol Catherine had 906% gain right here. We want to reward you. So there were how many people? Not as many people this week. How about that? 20 people this week. So I'm going to assign each of you gentlemen and ladies a number. Let me zoom in. There we go. Equals this plus 1. There we go. So now for every 20, I give away a $10 Amazon gift card, and I go to random.org, and random.org will make sure that I am a random human. It may take a moment here. And then we can say, okay, between 1 and 20, give me a random number, and I will give away a $10 Amazon gift card to one of these incredible people here. Let's do 3, 2, 1. Number 6, Becca D. Everybody say congrats to Becca in the chat. Congrats. Congrats, G-R-A-T-S, to Becca in the chat, because she is our first winner in this week's weekly winner circle. So let me put this over here so I don't forget. At Becca is this week's winner. I'll tag April. So April will send you that $10 Amazon gift card on Monday. Now, I told you I give away some money. If you haven't put hashtag Outlier in the chat, I don't know what you're doing. You must hate money, right? Because I'm about to give away some money. How's that sound? I'll give away a $10 Amazon gift card right now. You have 10 seconds in the chat to put hashtag Outlier. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, go. All right, who's it going to be? Somebody here is going to get a $10 Amazon gift card. And really appreciate Skinny Buff Guy pointing out none of you catfish, because Frankie Dorsey is the winner. Congratulations to Frankie. Congrats to Frankie. Congrats to Frankie. And you know what? You know what? I'm feeling generous today. How about we spin the wheel again? I'm feeling generous today. Let's spin the wheel again. I'm going to write this down so I don't forget. Frankie Dorsey. I'm feeling generous today. Let's do it again. Yeah, let's draw again. You still have a chance if you haven't put your name in already. But what are you waiting for? 3, 2, 1, go. All right, who's it going to be? It will be Klaus. Congratulations, Klaus Valentine. There we go. Congratulations to Klaus. Congratulations to Frankie. The way that you can claim your winnings is shoot us an email over at support@outlier.com. I don't know why it looks like that. It normally looks right. It looks weird today. Support@outlier.com. Send us your name and email, and we will take care of the rest from there. So how's that sound? Isn't this fun? Do me a favor and put fun in the chat if you think this is really fun, because I think this is super fun to be able to give away some money for you guys. So while we're here, remember the first rule of Outliers, you tell everybody about Outlier and you hit the like button. So real quick, what is Outlier and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting rationally fearful or greedy and by how much, allowing you to get into the stock before the Outlier move happens. And if you're ready to save time, make money, and start winning with less risk, it's a simple 3-step process. All you got to do is head over to outlier.com, pick up the annual pass, which is just 82 cents a day. Or if you're on the monthly pass, you can upgrade and save 64% off the regular monthly. You can tell I've done this a couple times. You can save 64% off the regular monthly price by one click, and then start using Outlier 9 immediately in your trading. And step 3 is just sit back, relax, and you just found the easiest way to save time, make money, and start winning with less risk. Outstanding. Now, my style of trading using OVTLYR is called the golden ticket trading strategy, and it has me locked up, right? Because I'm listening to the market. I'm listening to what the market is saying right now. With the market breadth plummeting, which we already talked about, the market trend is still going up. There's a divergence there, and that divergence there can last for a while. What I'm not going to do is force anything. If you are trying to force trades in this market, you are not doing this. You are not listening to what the market is telling us. Now, what will happen next week? I have no idea. I have no idea. But based on the OVTLYR 9, I will say that I'm not confident for big moves upcoming this next week, right? But then again, on Friday, which was this candle here, I said, I don't know where it's going to go, but I'm not very bullish. I'm not very bullish. And what happened? Oh no, the price went up a little bit. Oh no, the price went up a little bit. But here's the deal. On Sunday, I will have a video come out where I think the market is going, and it's going to be based on some analysis that I want to share with you. So be sure you watch that video on Sunday. And of course, wait a minute. Jeremy said, I bought the annual pass with the profits I made on the free trial. Well, that sure sounds good, doesn't it? That sure sounds good. It usually comes out in the morning around 7, 8 a.m. Central Time. So do me a favor. Be sure you click one of these 2 videos. Now, I know somebody asked in the chat or sent us an email saying, hey, it never pops up for me. It's automatic. It's automatic on YouTube for our replays. That's why I do it. I know if you're watching this live, it's not going to pop up, but a lot more people watch the replays, which is why I do this. So listen, if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos and have a fantastic weekend. I will see you on Sunday's video. Don't forget, talk soon.